And Stats Canada has just released the latest Canadian GDP numbers. Real gross domestic product declined 0.2% in the fourth quarter in 2025 after rising 0.6% in the third. The fourth quarter decrease was due to withdrawals of business inventories following inventory accumulations in the third quarter. For reaction and in-depth analysis, we are turning to Sal Guatieri, Director and Senior Economist at BMO Capital Markets. Sal, thanks very much for joining us.
Welcome.
Initial reaction to the numbers, they're just coming in now. Off for the quarter, up slightly for month over month compared to the survey. Are you surprised at that?
It's a bit surprising, yes. We thought the number could be either side of zero. We were expecting just a very slight increase in the quarter. So a bit of a disappointment. So that's 2 quarters out of the year where we saw the economy contract back in the second quarter, obviously because of the trade war. But it does appear that ongoing uncertainty about trade policies continuing to weigh on business investment, and that's what's keeping the economy down towards the end of the year.
Sal, it's Philip Peterson. When you see this number in the latest NPR report by the Bank of Canada, they had 1.1% for 2026. Now this is fourth quarter, but do you think this weighs on their decision for the potential of further interest rate cuts through the remainder of this year?
Well, I think the bar is pretty high for the Bank of Canada to do anything on interest rates. This number is a little weaker than the bank was anticipating, but not weak enough to spur another rate cut. I think unless the economy shows more sustained weakness, or the labor market shows sustained weakness, I doubt very much the Bank of Canada is inclined to cut rates. They seem pretty comfortable with where interest rates are right now. They believe they're adding some modest stimulus and support to the economy. And remember, Q4 is just the one quarter. There was a lot going on in that quarter. We are anticipating an improvement in the economy in the first quarter of this year, and actually through this year as well, in response to previous interest rate cuts and plenty of fiscal policy support. So what it comes down to is that the economy last year, when you look at the start of the year to the end of the year, grew at around 1% rate. That was a big step back from 2024, where it grew at a 3% rate. This year, 2026, we're probably going to see something in the middle, in between, around the 2% mark. But that's pretty decent growth. And I think as long as that's on track, Bank of Canada will refrain from cutting interest rates. At the same time, it will take much stronger economic performance, much more improvement in the labor market before the bank even entertains the idea of raising interest rates. So we see the bank on hold right through this year and well into next year as well.
I just want to talk a little bit about trade right now. The exports and imports rose in the fourth quarter, but decreased overall for 2025. Which of those numbers is the more important one to you?
Well, I think it's a number for the fourth quarter because it's the most recent figure we have for exports. And it's very encouraging that we are seeing some improvement towards the end of the year, even as you mentioned, for the entire year. Exports were down. A lot of that, of course, in the second quarter, when we took the full brunt of those hefty tariffs on steel, aluminum, motor vehicles. But it does look like our exporters now are adjusting to this new higher level of tariffs. And as long as we don't see tariffs increase further, I think it's looking pretty good. The Canadian dollar is still relatively cheap against US dollar and other currencies. So that's providing some support to our exports. So I would put more weight on the fourth quarter export rebound as a sign of better things to come for 2026.
And along the same lines there, Sal, when we're starting to see some of the data out of the United States manufacturing data improve, we're starting to see the trucking data increase. Do you think this is a sign that we can see a spillover into Canada that could lead to better economic growth, or were the risks to the upside when we see some of that data south of the border?
I do, yeah. It's very welcome that the U.S. economy is maintaining this resilience. We are actually starting to see some signs, encouraging signs of a recovery in its very depressed manufacturing sector. Now, some of that is in response to some reshoring, and because of the tariffs are crowding out some imports. But overall, the fact that the U.S. economy is remaining quite healthy is providing that support to Canadian exports that we've lost because of the higher tariffs, especially on those three very impacted industries. So overall, if the U.S. economy continues to grow at least at a decent rate, and we see it growing above 2% this year, that will provide some nice support to Canada's exports this year, and indirectly or directly impact push our economy forward.
And just looking at one of the numbers, staying in Canada, household spending was up for the month after the drop in the third, or not for the quarter is up 0.4% after that drop in the third. Any clear reasons for that? Are we seeing?
Well, consumer spending has been very uneven through last year. It was very strong in the second quarter, partly because of the Buy Canada movement and also because of interest rate reductions. We start to see some of that spending slow through the second half of the year. But it is encouraging that we're still seeing households spending. We've taken a bit of a hit, I believe, probably in the first quarter of this year, partly because of the snowstorms across central Canada. But overall, we think Canadian consumer spending won't be terribly strong this year, but won't be weak either. As long as job growth holds up to some extent and wages continue to rise and the economy overall improves through this year, we think consumers will do their part to push the economy forward. What we really need now is business investment to come back in a big way. Unfortunately, that's unlikely to happen until we get some clarity with respect to trade policies, in particular with respect to the USMCA renegotiations. And that may not be settled until next year, maybe even the year after that. So I think that will put somewhat of a brake on business investment. So really, it will be consumers, government spending in particular, and perhaps even exports pushing our economy forward this year.
Okay, Sal, thanks as always for joining us. We appreciate it.
Welcome.
Sal Guatieri is Director and Senior Economist at BMO Capital Markets.